All right, Girija Shankar, lead analyst and institutional equity specialist. He, of course, tracks the cement sector with the Yes Securities. He joins us now. And what we're discussing and deliberating that will cement prices sustain? Now, cement prices, of course, could be a function of what is happening to the real economy and what essentially is happening to the underlying prices of pet coke. So good morning. Thank you for joining us. Could you broadly tell us that how essentially the demand for cement is shaping up? Because in the last 3 years, prices have been flat, even though GDP growth rate has been above 6%. Why is that?
Hi, good morning, Nikunj. Yeah, so we did a brief channel check in January, February, and March. This 15, 9 days of channel check. So in January you saw around 2 rupees of price hike. February also 5 rupees. In December also it was high. That was because of central region price hike. But in March, this 9 days pricing was, around, I can say, Eastern region had seen a very big price hike. That is a 15 to 30 rupees of price hike. But yes, this price hike, what we are seeing from past 3 4 months, that is majorly contributed by your Eastern region and Central regions. Southern region prices are still remain, the muted, and there is no price hike from past 4 months in Southern regions. See, from demand perspective, demand is not that so great, which could have much better, but because of the government capex is slow down, and lastly, the last month the Kumbh Mela also that has given some kind of volume disruption, as well as the logistic issue was there, labor issue was there. Even in fact, upcoming Holi also see Holi is there, and Ugadi is there. So these are the factors which is going to dent the demand as well as the pricing. So whatever the price hike the companies have taken recently in March. So I believe this is not going to sustain for longer period of time. Again, still 15 days more are there. So we'll have to watch out whether this price is going to sustain or not, because generally March is a year-end volume push by a lot of companies. So again, the pressure will be there. So more or less, what I can say, whatever the demand or pricing sustainability, if you see, that can be of you can expect from second half of FY26. Before that, lot of kind of pressure will be there in terms of pricing pressure. What I am seeing, because a lot of the larger players are actually quickly trying to get the market share. So these are the prices are still sustained in the market, which is not taking price in any significant moment.
Um, Pet coke is about 30 to 35% of the total raw material cost for cement.
Yeah.
Given that oil prices have come down, will pet coke prices come down? And if they come down, could this impact cement margins?
See, ideally, what happens in petcoke prices from past 2 3 months, if you see, the petcoke prices actually has increased year on year basis. So the companies, they keep this energy inventory for 45 days to 50 days period of time. So whatever the price, the spike in petcoke price or international coal prices or domestic prices, in fact CPCL domestic coal prices, petcoke prices has increased by 630 rupees per ton last month. So these are the impact you will see in next quarter, not in this quarter, because whatever the prices were low cost inventory, you will that is going to reflect in this quarter. But yes, whatever the prices were up for the petcoke and international coal prices, the impact you will see in next quarter.
So what's the view right now, Girija, given the amount of consolidation in the industry and all the dynamics at play that we just spoke about? Is it a bullish take now on cement, and what are the preferred stocks here?
For next March quarter, again, what I'm talking about, March quarter, you will see the high volume. It's like from past 9 months volume, if you see, there is a spike of around 3.5% year on year basis, 9 month FY25. Obviously, as I'm saying, March quarter is a volume driven quarter. You will some kind of volume uptick, and more or less you will see 3.5% to 4% year-on-year volume growth for FY25. See, this could have much better because because of certain reasons, as I mentioned, intensifying competition in between the large players to getting into quick market share, and secondly the slowdown in government capex programs. So these are the issues where revolving around right now. That is the reason we are not expecting much volume growth for FY25. But yes, the pent up demand which is in FY25, that is going to see, you will see kind of volume spike or kind of sprout in volume in FY26. That too in mid of you can expect quarter to FY26 onwards, you will expect some kind of demand. But before that, I do not expect much from the cement companies. But yes, again, one more concern, that is increase in petcoke and coal prices. See, company have to do two things. Either they have to increase the price, or they have to use low cost inventory and energy inventory to sustain the market margin in the going forward. So here the concern is that pricing pressure is there, so increasing the pricing in a significant way is I believe it is not much possible right now. But yes, companies who use who use a lot of green energies and who are into WHRS or solar or captive coal mining, so they will be having some kind of benefit, and their margin will expand. But basically what I am talking about, the regional players are going to benefit right now. As I mentioned, eastern regions prices are actually up by 10 to 15 rupees, and continuously it has improved from past 2 months. So this time in this quarter, we can expect Eastern region players will be giving good numbers. And one more point I need to add it here. Last quarter, most of the companies they applied a different strategy, for to give a good numbers. Some companies they try to have they played volume over prices. Some companies prices over volume. So when I'm saying about prices over volume, they do not want to lose the pricing despite having a low volume sales. So this time also same kind of scenario we will see in the market for this quarter.
Girija, with this, we'll let you go on that. Thank you so much for taking the time out and giving us a sense that what's actually happening within the cement pack, and from here on, where are the prices and volume is headed.
If you like this video, then like, share and subscribe to ET Now.